The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com for the week ending April 4th, 2025. Just finished the newsletter, the report for April. It's published. It's available to our premium members. A little tired. I'm going to make this one really brief. First of all, lots of disarray in the markets due to the tariffs that were announced earlier in the week by President Trump of the United States, and all markets got hit pretty hard. I have said for years, as many others, that when we get a large sell-off in the equity markets, it takes everything down, including gold and silver. Silver got whacked really hard, like 14% or something, 7 and 7, 2 days in a row. And it was up about 17% for the last few months put together. Gold did not sell off nearly as much. And this comes from a friend of mine that's also a member of the Morgan Report, known him for years, finance guy, majored in economics. And I'm just going to read it to you because it makes a lot of sense. This time, gold is unlikely to be hit hard for three basic reasons. The first is that credit risks subsequent to the bear market onset are demonstrably greater today. So gold is the best safety hedge there is, even for the banks. Secondly, investor exposure to gold in Western capital markets is negligible, so there's little actual metal to sell. And lastly, central banks are not only keen buyers of any bullion coming onto the market, but are almost certainly restricting market liquidity to reduce gold leaving their supply. It's a leasing supply that may be underestimated. If the central banks are refusing to roll over leases, a lot of bullion banks will be in trouble, and I won't give his name. Silver, on the other hand, much more volatile. It is an industrial metal, more so than a monetary metal, if you look at the percentages of use. And the other idea being it's such a small market, it can really, really get whacked. And the leverage in silver is usually greater than it is in gold, although both are highly leveraged markets. This is the latest from Bob Johnson from Gold Sheet Mail. And again, thank you. Shout out to Bob. He's been doing this for years, and it's really appreciated. We can have the base metals up here at the top, year to date. You can see and read them all as well as I can. What I wanted to point out was gold was up, I think it was on 18, 19%. It's the close of the week, it's still up almost 16%. Palladium is basically flat. Platinum's up maybe 2%. And silver was up almost as much as gold, like in last week's update. And now it's at 2.3%. So again, it really got whacked. The gold-silver ratio got to like a 91, as you can see here. So well above what it historically is. So just pointing out that silver really got hit. And gold maintained, as I just read you, three major reasons why. Gold is establishment, basically. It's never said that on your main financial news channels, but it really is, because central banks really covet gold, but they just don't speak about it. So, as I said, I'm going to make this one pretty quick. I'm going to hit our Twitter feed. And there's a couple here. One, as I said, we pointed out, we just wrote, or published rather, the monthly report for April. The editorial this month is pretty much about David Rogers Webb, The Great Taking, an update on that second film that he made. Many people aren't aware of it. I'm in contact with him, and I'm probably going to interview him again in the near future. We had a couple company updates and a couple mergers. A lot of our companies are getting acquired by bigger companies because they are solid companies. And that's what you really want. You want your portfolio to be stacked with the blue chip of the blue chips, with blue chips on top of those, and sprinkled in with some speculative bets. You really don't want to bet the farm. And there will be a time when you really can switch out of some of the blue chips into some of the more speculative plays, but that comes later in the bull market. And we're just been in it, gold especially. But the miners really haven't caught up to gold, except for a few exceptions. We have a few that have maintained or done as well as or better than gold. But on the aggregate with the XAU or HUI, we really have not, which means stock picking does matter, especially in the resource sector. For those that don't know, I'm planning to do an AMA, Ask Me Anything, probably once a month or thereabouts. Just finished one. It's available for you here on Twitter. You can go to our blog and find it. I have the panic button. Don't hit the panic button. Nothing to panic about, although the market certainly acted that way at the end of this week, as I've said several times. And a couple more on our Twitter feed really quickly. Manico64, Mario does great work. I think he does a video every day. I don't have the time to do one every day, but he does a great job. I've been on his show a couple times. I think I've had one on mine once or twice. Anyway, this from the FT Financial Times, Trump Tariffs Live. Federal Reserve's Powell warns levels will boost inflation and slow growth. Yes, that's a given. Here's an interesting one. Trump tariffs will barely dent the platinum group metals vehicle demand. TF Metals showing you what happened in the silver market. It was brutal, as you can see. People have asked me, where is the low? Technically, we have a strong probability, but technical analysis is an art as much as a science. It's more art than science, really. I looked at this question months ago when I was asked, well before we got well above 30. And at that time, and it maintains, 26 is about as bad as I'm going to see it as a round number. But will we see it or not remains to be determined. I do expect to see a bounce back up on almost everything. I just showed you the gold-silver ratio according to Gold Sheets, but according to Peter Kraft, it's about 100 to 1 right now. Does that spell an opportunity? I would say yes. I don't think it'll get much higher than that, but it certainly could. And back to the main landing page at themorganreport.com. This is our free newsletter over here. It says it, showing our free. All we need is a name and an email. You'll get a autoresponder to opt in saying, yes, that's my real email. You click the button and you're in. The reason I suggest you do that is all those AMAs, the Ask Me Anythings, are going to be sent to your email, and you'll know how to sign up. I do WebEx. It's got a bigger platform than Zoom. It's a little more robust, slightly, but it's it was a gold standard before Zoom was ever around, and I've just maintained that account for a lot of our webinars. I do some on Zoom, but most of the time I use the WebEx platform. And lastly, I'll be on Canadian Prepper next week, which is a bit of an honor. I've followed Nate's work for a very long time. We'll be talking, I think, whatever he wants, but I think it's about physical gold, silver, primarily silver, I think is what he wants to discuss. And that's another reason to be on this email list, because he's probably going to ask me for who I think are the best of the best as far as buying physical, and it's a Canadian prepper, so he'll want Canadians. So I'm going to probably put that into an email on our private email list here. So if you wanted access to that, I can't promise that. That's what I'm thinking right now. And it's probably 90% or better chance that I will do that for those of you that are in Canada. And even if you're not, there are ones that I do recommend from time to time. Not that often, but I do. So there it is. I'll wrap it up. This is David Morgan, themorganreport.com, signing off. I'll be back with you next week.